The implementation of the Goods and Services Tax in Malaysia began on 1st April 2015 at the standard rate of 6%, replacing the Sales and Services Tax system. GST was a multi-stage tax levied on value added at each level of the supply chain. Registered business was required to charge GST on taxable supplies and could claim back input tax on business-related purchase. The system was supported by a digital infrastructure for registration, filing, and refund purpose. However, due to the political and public pressure, GST was abolished effective 1st September 2018 and SST was reintroduced. Under SST, sales tax is charged once at the manufacturing or import stage, while service tax is charged on selected service. Businesses are required to register separately for sales and service tax, and the tax burden is embedded in the selling price, often without transparency to consumers.
Now let's look at differences between GST and SST system. The first one is the tax structure. GST is a multi-stage tax. It means tax is added at every level of supply chain. Businesses can also claim back some tax. SST is a single-stage tax. It is only charged once, either on goods or services. The second one is the tax rate. GST has only one rate, which is 6%. SST has more than one rate, which is sales tax is 5% or 10%, depending on the goods. Services tax is 6% for certain services. Third one is we look at compliance. GST is more complex. Companies must send reports often and keep detailed records. SST is easier. No input tax and the reporting is more simple. Next one is transparency. GST is more transparent. The tax is shown clearly on the invoice. SST is less transparent. Sometimes customers do not see the tax. Lastly, the tax base. GST covers almost everything, including daily items. SST only covers selected goods and services.
Next, the GST system brings in more money for the government because it covers more goods and services and works more efficiently. According to the Ministry of Finance Fiscal Outlook 2024, GST is better at providing steady tax income than SST. This is because SST covers fewer items and is more likely to have tax losses or leaks.
Under GST, consumers can clearly see how much tax they pay because it appears on every receipt. GST might seem to make price higher, but it can actually help reduce costs because business can get refunds for tax they already paid on their suppliers. This system stops taxes from building up at each stage of production. While SST work differently and can make things more expensive for consumer. Even though the tax rate look lower, with SST, business cannot get refund for tax they pay, so they must add all these costs to their final price. This means tax keep adding up as product move through different stages of production. For example, car manufacturing. Under GST, when a car company sells a car for 100,000, they charge 6% GST 6,000 to the customer. However, the company can claim back the GST they already paid for steel, part and also service used to build the car. This means customer only pay tax on the value the car company added. Under ST, the car companies pay 10% tax on imported parts and materials, but they cannot get any refunds. All these tax costs get added to the car price. Plus, customer also pay service tax on things like insurance and maintenance. Because tax keep building up through each step, customer end up paying more than just basic tax rate. This makes AST car potentially more expensive than GST car, even though GST looks like it has a higher tax rate.
Lastly, I will talk about why the government continues SST despite GST being more effective. The first one is public perception and political sensitivity. GST was unpopular among the public because it views as a burden on the cost of living. Reintroducing it could cause a political backlash. And the second one is administrative burden on small businesses. GST required detailed accounting and reporting submission, which small businesses may find difficult and costly to comply with. The third one is inflation concern. GST was blamed for price hikes when it first introduced, creating fear among consumers. The fourth one is reform in progress. The government may be preparing for a more targeted and hybrid system that balances efficiency with public acceptance. And the last one is short-term versus long-term focus. While GST is better in the long term for revenue generation, SST is easier to administer in the short term with minimal disruption.